To win in e-commerce, you have to own your income statement. So this video will show you the 3 keys to own yours. Hey, Jake from EcoShip at Reading, Pennsylvania 3PL here. I've watched 3 e-commerce businesses scale from my parents' basement, shipping 5 orders per day, into a 3PL where we're shipping 250,000 packages per year. So I've seen all the steps of growing an e-commerce brand and know that owning your numbers is absolutely key. So in this video, I'm gonna walk you through the 3 tools you need to own, live, and breathe your income statement. So to start, in case you didn't know what an income statement is, this is where you actually find out how much money you're actually making or losing and what it's contributing to your profit and loss. And so understanding every line of the income statement is crucial to any business. But I've seen so many brands whose income statement is just a mess. So I'm gonna walk you through how exactly it should be set up, and then I'll fix a real brand's income statement in real time so you can see how this is actually done. All right, first we'll walk through the big 3 components of every income statement: revenue, cost of goods sold, and expenses. I'm gonna assume you're using QuickBooks or some other accounting software like Xero, doesn't really matter. All right, so what goes into revenue? There's 2 things, sales, and if you wanna get fancy, discounts given. Now you can add sales in one of 2 ways, the easy and less accurate way, or the hard, more accurate way. The easy way is good if you're doing like less than 500 orders per month. So the easy way, wait for payouts to come from Shopify and categorize them as sales when they're downloaded from your bank. I'm gonna assume that most of you are already doing this. The drawback here is that the time delay between Shopify and your bank, it takes a few days for the funds to arrive. And that may not seem like a big deal, but when you're looking at monthly reports, you'll always have timing issues. So as you scale, you'll need to change to the hard way in order to ensure your finances give you accurate data. Okay, the hard way, create daily sales receipts based on sales for your Shopify store. Categorize these as accounts receivable, and then when the deposits from Shopify come, categorize them to accounts receivable to reduce the amount there. This is the harder, more accurate way that you'll need to transition to if you want accurate finances, and to own your numbers, you need accurate finances. But if you're under 500 orders per month, you can go the easy route. The advantage of the hard way is that in this scenario, you can actually you can avoid any sort of timing delays. So let's say I have a huge sales month on the last day of the month. That is not going to show up if I'm just getting bank deposits. But if I'm getting sales receipts from Shopify and entering them into QuickBooks, then that will actually be accounted for. So this is where the scale magnifies or minimizes the problem. So if you're under 500, go the easy way. If you're over, you should probably start doing the hard way. Next, cost of goods sold. So this is another area I see a lot of confusion in. To be clear, a cost of goods sold is any cost you pay to deliver your product, including product costs, labor, shipping costs, and packaging. This is the guiding principle. If I shipped 0 orders in a month, what costs would go away and what costs would remain? The costs that go away are costs of goods sold. Costs that remain are expenses. Cool? Okay, so let's talk inventory. It's the biggest part of cost of goods sold. So how do we track this accurately? There are 3 steps. So, okay, we're about to get really technical for 60 seconds, so hang on for just 60 seconds. Step 1, you wanna create a bill. When you get an invoice from your manufacturer, you wanna enter this as a bill in QuickBooks. Put the amount in and make the category inventory. This is an asset on the balance sheet. This is going to increase accounts payable and inventory on your balance sheet. Step number 2, move inventory from asset to expense with a journal entry. So once a month, download and export of all the products you shipped that month, plus their product cost, make a journal entry, and credit inventory and debit cost of goods sold. This gives you an accurate representation of what product costs you paid in the month based on what you shipped. And then step 3, categorize the bill payment. So when the payment for the bill comes through to your bank, match it in QuickBooks to the bill you created earlier. Following those 3 steps will give you hyper accurate cost of goods sold on your income statement. Okay, last section on the income statement, expenses. Here's the place where all of your non-variable costs go. These are the costs you'd still need to pay if you didn't ship any orders in a month. It's your fixed costs. This includes marketing, Shopify, other software, any rent, and any salaries you may have. This section is the most straightforward. Simply categorize expenses as to the right categories when they come into your bank account. All right, so now we've gone through the income statement. Let's walk through a real income statement from an e-commerce brand doing $300,000 per year in revenue. So to do that, we're gonna jump into the computer. Let's go. Okay, we're in the computer now. So starting with revenue, you can see that they don't have a discount section in here. They're just categorizing as transactions come in from the bank, and the discounts that they've given are already applied. So what they should do is go into Shopify, download the discount report, and make a journal entry debiting discounts and crediting sales to accurately track how much money they're giving away each month. So let's add that. Okay, COGS is a mess here. So number one, our COGS number is just telling us how much we bought in this month, not how much inventory value we actually sent to people. This is not helpful. And two, fulfillment costs, this brand uses a 3PL, should be cost of goods sold, not an expense. So we need to do two things here. One, categorize the bills as inventory and get an export from Shopify of inventory value from October to create our journal entry. Then number two, we need to move fulfillment and postage up to cost of goods sold and out of expense. So I'll go grab that and then come back. Okay, so you can see I did some repair work in here. I put in discounts, which I got from Shopify, minus $572. I got e-com cost of goods sold. So here I went to Shopify, I downloaded what products did we send in October and what was the value of those products, and put that in here as a journal entry. So now if you could see our balance sheet, you would see our inventory decreased by this amount in October, and we actually spent $3,297 to send products to people this month. Then I moved postage and fulfillment charges up into cost of goods sold. So you can see our cost of goods sold is much higher here, our gross profit is lower. And then expenses, all we have left are marketing and advertising and Shopify and PayPal fees. So our total expenses are much lower. And actually our income is higher than what we thought it was. So if we look over here at our original, we can see our income statement was saying that we made $10,000 in this month. But in reality, we actually made $11,000 because we were accounting things incorrectly. And so this is why it's just so crucial to have your accounting correct, because it makes a difference in your net income at the end of the day. So those are the major problems I see people have on their income statements. It's going to be cost of goods sold, and it's going to be having postage and fulfillment charges up there in cost of goods sold, and doing it with a journal entry instead of just doing it as the expenses come in. That's not the best way to do it. So I hope this has been helpful to you. I'm gonna link this corrected and original income statement in the video so you can check it out if you want to. If you have any questions about e-com accounting, I get kind of nerdy around this stuff. I enjoy the e-com accounting, and there are a lot more principles like FIFO if you're doing lot tracked products that I did not go into in this video just because it's too in-depth. But this will get you to a great place if you're doing like 0 to like 750 orders per month. Just following these things will get you to a great place with your accounting, where you can actually use your numbers to know what's going on in your business. This is like the most crucial aspect, because now you know what's actually happening in my business. Am I making money? Am I not making money? It's a harder question to answer than you might think it is. So if you have any questions about it or want to talk anymore, feel free to reach out to me, jake@ecoship.com. Always happy to talk. Thanks everyone, have a good one.